market structure. Hold on. All right, so what is market structure? Basically, with market structure, right? Market structure is like, the direction of the market. How does the market moves? That is what market structure is. So basically, the movements and the directions of the market is what market structure is. So an example is going to be, when you have the market going down and then the market retraces and then it goes up like this and it goes down, it goes up like this, it goes back down, right? This is a structure. This is a movement of the market, right? So this is what we're going to be doing today. And then we're going to be talking about confluence. Hold on, let me see. Let's see. Right, so we're going to be talking about confluence, top-down analysis, catching market turning points, and then basically I'm going to be showing you guys a 20 to 30 pips trading strategy, right? It's usually pairs that moves really fast. So we're going to start with market structure. I told you guys what market structure is. First of all, what I'm going to be doing is I'm going to be drawing random lines on my chart, right? So let me turn this back on. No, let me turn it off actually. And I'm going to take my horizontal line, right? I'm not seeing anything right now. So let's see. I'm just going to draw horizontal lines all over the place, right? Just random lines. And I'm going to switch this back on. Let's see what happens to these lines, right? So my first line, which is this, what I'm seeing is market came down, hit this line, right? I saw a rejection and then it went back up. With this line, same thing, market came down to this line and it went up. With this line that I have here, if you take this all the way back, right, you might see a rejection right here. This is the rejection, 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 rejection. So basically, my point is that support and resistance, right, is everywhere in the market. Every turning point is a support and a resistance. If you draw random lines from head to toe, right, you're going to have these lines being reacted by price. So what I'm trying to say is, if you want to be drawing support and resistance, then everywhere is what? Support and resistance. So what we're going to be doing right now is we're going to be talking about key level support and resistance, right? What is key level support and resistance? Key level support and resistance is a place where market is likely to reverse, right? Meaning if I have a key level like this, then if market is, ranging around the place and market hit my key level, then I'm expecting what? A massive rally or a drop from that region, right? I'm going to be showing you an example of these type of setups, and I'm going to show you guys how you guys can identify these key levels. Because with key levels, you don't have to be trading. You don't have to be trading everywhere, right? You don't have to be trading here. You don't have to be trading here. All you need to do is just wait for that key level to get hit, and then you take your position. So I'm going to be using the NZD USD, this one. And then this was a key level, right? And right from the key level, let's see how market dropped. How many pips, right? From this side, market dropped 270 pips from this key level. Okay, so how do you identify key levels? First of all, what you do is all right, so first of all, what you do is you start with a high time frame, right? You start with a high time frame. And then let me skip this key level and talk about top-down analysis because it's kind of linked to this key level. And then we get back to the key levels. So what is top-down analysis? Top-down analysis is when you start with a high time frame. Basically, you start doing your analysis from a higher time frame to a lower time frame. So if I wanted to trade, let's say I wanted to do my analysis on the NZD USD, right? Basically, I start with a high time frame, which is the monthly time frame, right? And then I want to see the overall direction of the market. What is the market showing me, right? And then after this monthly time frame, you move to a weekly time frame. And then you move to a daily time frame. And then you move to a 4-hour time frame. And then you take your entries of the 1 hour or the 30 minute or 15. So back to what I said about key levels. In finding key levels, the best time frame to find your key levels is a higher time frame, basically from the daily to the monthly. But the best is going to be the weekly and the daily, right? So I'm going to be using the weekly and the daily. And let's do something real quick. All right. So what is a key level? I told you guys what a key level is. A key level is also a place or a level that has been tested multiple times, right? But it's supposed to be on a high time frame. You can't have a key level on a 1 minute or a 15-minute time frame. That's not a key level. A key level is supposed to be on a daily, weekly. Every turning point on a daily or weekly can be a key level. So what I'm seeing here is market, for some reason, market was going up, 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 and for some reason, I don't know what happened. Market just reversed at this point, right? So this is going to be a key level. I'm just going to put a line here. Oh, hold on. So yeah, I'm just going to put a line here, right? Market was going up. All of a sudden, right? Market just reversed at this point. If I should take this way back, right? You guys can clearly see over here that something happened, right? So let's say if market hasn't gotten to this place, right? Market hasn't gotten to this place, and I was trading this. Then if I have my key level here, right? I'm just gonna wait for price, to do what price wants to do. And if price should hit this line, then I'm doing what? I'm selling, because that level is my what? My key level. And remember, price, you sell based on where price is at. So if price was ranging on top and price was approaching this level, then I'm supposed to be what? Buying, not selling. But if price breaks this level, then you wait for a retest. A retest on a key level is a strong or a stronger zone, right? So if price was approaching my key level, as you guys can see here, this is what market did. Market broke my key level, which is this level. And then market came right back into the zone. And then look, market dropped. I think this is probably 1,000 pips. I'm not sure, but I think it's, 2,000 pips. Look right here, 2,000 pips from this drop. But this is going to take years, because this is 2018 to 2020. But basically what I'm saying is, on a key level, market is likely to drop more than 20 or 200 pips. From 100 to 200 pips, depending on the pair. If you trade something like the pound pair, it's going to move more than 200 pips or more than 120. But if you trade something which is really slow, then it will probably move like 70 or 50 pips. So what is a key level? I told you a key level is a place where market retests a lot of times, right? A level where market has been, market get to that level, you see a retest, market get to that level, you see a retest. And on a daily time frame, every turning point is a key level. So what I usually do with key levels is, I don't really want to have, a lot of key levels, because remember I told you guys that when I'm trading, I don't want to have lines, all over the place. I want to have a line which is closer to where price is currently trading at, right? So if price is up here, then what is a key level around this zone, right? Around this zone. So if price is ranging here on a weekly time frame, I'm not going to be finding zones here, right? Because if this is going to get to this place, then probably in 3 months, or I don't even know. So you want to find a zone which is closer to your price. So what I'm going to do is, I'm trying to find a key level, right? This side, right? Just using your eyes, you can tell that this price looks like what? A key level. Because at this price, if I use this, the pointer that I'm using right now, right? You could tell that when I put the pointer here, right? At this level, I'm seeing this level being what? Retested, this level being retested, this level being retested, this level being retested. So what I'm going to do is, I'm going to put a straight line here, right? Just like this. And then after I have the straight line, I'm just going to move to it back. I'm just going to move back and see what actually happened on this price, right? I'm seeing a rejection, a nice rejection, a nice rejection. I'm seeing a nice rejection. I'm seeing a nice rejection. I'm seeing a nice rejection. So meaning, if price, right, should make its way up to this side, then I'm expecting what? Price to drop, a massive drop, right? A massive drop up of this price. So right now, since I have my key level, right, I need to adjust my key level, because if you don't adjust your key level, price might get to this place, and then price will probably, range around this place, not hit your key level and then drop. So how do you adjust your key level? You move to a daily time frame. This is the weekly, right? I move to a daily time frame. So one thing about market structure is we have something called a double top, right? Equal is the same as equal highs, and then a double bottom is the same as equal lows. So what is equal highs? Equal high is when the market goes up like this and then turn all of a sudden, right? This side is going to be a level. Remember I told you if market turn, you have a level. So if price is, kind of like making its way up, then I'm expecting price to, maybe hit this or cross this a little bit, right? Create a rejection. And then I'm expecting price to go down. This is supposed to be on a higher time frame. You can have a double tab or equal highs on a lower time frame because that lower time frame might not be that strong, right? So if price gets to this time frame, you can have price just breaking this easily. So since I have a key, since I have a key level here, right? I need to adjust my key level. What I'm seeing is I'm seeing a reaction here, right? Market almost hit this, but wasn't able to hit this. Market got to this place. So I'm going to have two levels, right? Remember, I'm going to have two levels, this level and this level. Meaning if market is going up, I'm expecting, right, a rejection of this or a rejection of this. So if I took my entry here and market breaks this, I'm still not going to close short because I know market will probably, create some kind of fake out and hit this level and do what? Drop. So I'm not going to be taking my entries here, or you could probably take your entry, or you could wait for what? Confirmation. Let's see exactly what market did. Market was going up, going up, going up. So at this point, I'm just not going to take any trades because I have a key level and I'm expecting what? A massive drop. What people really want to do is anytime they know this is a key level, they want to buy to the zone. Don't buy because market could probably drop before going up. You're not really sure. So just wait, patiently wait for price to do what price wants to do. Wait for the market, right? So let's see. Market is going up, going up, going up, going up, going up. Now market is approaching my key level, right? Let's see. I'm still not taking my entries. I'm still not taking my trades. I'm still, okay. Market is on my key level. I'm seeing a reaction, right? I'm seeing a rejection. This is on a what? On a daily time frame. I'm going to move this to a 4-hour time frame. I want to see exactly what market is doing at this region. So as you guys can see, I have one key level and I have this key level. So what I'm basically expecting is if market should break this and then goes up, then I'm waiting for market to do what? Hit this next level and then drop. Let's see what market did. It went up. Okay, fine. I'm seeing market. So this is where you start drawing your levels because market is basically on a key level. This is also a key level. This is also a key level. Remember I told you market could just drop from this region, right? And go down, or could go up and drop from this region. But you need that confirmation. What is telling you that market will drop from this region? What is telling you that market will not drop from this region? So as you guys can see, right? Market went up to this key level. I saw this rejection. The next candlestick was a what? Was a bearish candlestick. And then this next candlestick is showing me an indication of a rejection. So basically what I do around this region is I'm going to take everything off and I'm going to draw back my key levels. And then I'm going to draw one here. All right. So what is telling me that this is going to drop? Basically what I'm going to be doing around this region is I'm going to take this to a lower time frame, right? A lower time frame because I want to see exactly what is happening here. And remember when I was talking about breakout strategies, right? Usually you want to find a place where market is basically consolidating, right? Market is ranging. And then if you find a place where market is doing this, then what can you possibly do at this region? You could just take your lines, right? Your trend line, draw a line just like this, draw a line just like this. And if market should break down, then I know it's a what? It's a sell. So basically, this is what I'm trying to find at this region, right? So I'm going to take on a 4-hour time frame, you can't really draw zones. So you want to take this to a lower time frame just to find out exactly what market is doing. I'm going to take this to a lower time frame. Okay, that's nice. I'm going to take my line here, right? I'm going to take my line here. You just want to make it nice, right? This is fine. All right, let's see what market is doing. Okay, market went up, 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 right? Market broke this. So I'm looking to take my entry on the next what? Key level. This is my next key level. And remember, always on the key level, market will drop. Okay, now I'm seeing this. All right, so this is where I'm going to take my entry. I'm going to extend this line, right? Extend this line. 1 hit, 2 hit, 3 hit. And then remember what I told you guys, you buy low and then you sell high. This is where you sell. You don't sell around this region because you have a trend line. And this could probably hit this and keep going up till it hit this, right? So if you want to buy at this region, you want to buy at this region, you want to buy at this region. You don't buy here thinking market will break this. No, you could buy here, market will just, go up. So you buy, you sell here, and then you sell here, you buy here, you buy here, you buy here. I'm going to extend this line. But when I see this candlestick, right, I'm expecting market to drop. This is called an engulfing candlestick. And I told you guys that an engulfing candlestick needs to happen on a what? On a resistance or on a support. If you have an engulfing candlestick in the middle of nowhere, just like this, or just like this, it doesn't really indicate anything, right? But if you have an engulfing candlestick on a resistance, on a level, then it shows something. So let's say I take my entry, right? I'm going to take my entry and then I'm going for a swing trade, right? Because on the key level, remember I told you guys, market is likely to drop 200 or 100 pips plus. So this is 50 pips. I'm going to put my stop loss here, extend this line. And I'm going to raise this a little bit higher because this hasn't really got into my key level. So I'm not really sure. Market will probably go and hit this and then drop. All right. So this is my confirmation, right? This is my confirmation. This broke this with a strong look. So first of all, you have to look at the momentum of the candlestick, right? How strong is the candlestick? Right after this hit this level, right? My trend line, it came down with a strong momentum, right? Strong candlestick. So I'm expecting market to drop. And my second confirmation is market has what? Closed on my trend line. If you had market closing on your trend line with a rejection, then it shows you that market is likely to go up like this, right? I had a closed candlestick on a trend line, which was a what? A wick, a rejection. But this was a what? A full body, right? A full candlestick that closed on your what? On your trend line. So, what I usually like to do is I like to pop in more entries. So I'm just going to put in more entries around this region and put but you always have to make sure that you use proper risk management, because if this reverse and goes up, your account is probably going to be blown. All right, it's going up. 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 Right now, this is my key level. Right, this is going to be so. Right now, since market is going up, guess what? I know for a fact that if market should hit my trend, my key level, market is going to do what? It's going to drop. I'm going to be in loss. Right? How many? Let me see how many pips is this. This is 30 pips. So I'm going to be in loss. So at this region, right, I need more confirmation. More confirmation. I'm still scared, right? This is an engulfing candlestick right on this key level, right on an engulfing candlestick. And I told you, you buy low, you sell high. You sell when it hits your what? Your line, this line. Look at what market is doing. Market is basically ranging. Probably I didn't draw my trend line well. That was why I thought this was, I told you that, guys, that it was supposed to be on the wick. So if I should bring this to the wick, then clearly I can tell that this didn't hit my trend line, right? It's supposed to be on the wick. So right here, I'm going to pop in more entries. Right now I have 3 entries. But this is a stronger confirmation, right? This is a really strong confirmation that price is going to sell. My key level? Let's see. I'm not really sure if you guys can really see this. Look, a break of structure and a retest. What is this telling you? A massive drop. And plus, look, this is your confirmation. You have a key level, which is supposed to drop more than 200 pips. You have a trend line, which is being what? Broken, and a retest. How many confirmations do you have? Key level 1, trend line, that's 2, broken, that's 3, retest, that's 4. Let's see. See exactly what price is doing. Price went up, retest my second key level, right? Second retest. All right. So let's talk about this, right? I'm going to take everything off. Then we talk about this. So where was my key level? My key level was here. Hold on. All right, so this was my key level. See, this is called equal highs or double top or double top. And look at what market is doing here. If I should take this to a 4-hour time frame, market went up, retraced. I have a level. So I'm expecting market to drop off this level. Let's say as market was going down, I secured my profit. So at this point, right, market went down, went up and went down. So you move your stop loss to this region. And then market turn, hit your stop loss, which was in profit, right? You want to take a re-entry on this pair. Now you know this structure, right, which is called a double top or equal highs. Market is approaching this equal high. You put your level on this on the last wick, right? It's not supposed to be here on the last wick. And then I'm seeing a rejection. But let's see if this is actually a rejection. Okay, so this is actually a rejection, a strong candlestick. So meaning you could take your entry. I told you guys you don't take your entries on a 4-hour time frame because you're not really going to see anything. If I should take this to a 1-hour time frame, what I'm seeing is a huge engulfing candlestick. Engulfing candlestick. I'm not really sure if you guys know what an engulfing candlestick is, but like, where is it? Where is it? Where is it? Engulfing candlestick. All right, so an engulfing candlestick right here. Look, this is called an engulfing candlestick. You have a smaller candlestick, right? And the next one is going to be a huge candlestick. And it's supposed to be on a level, right? On a level. This is a level. It went up an engulfing candlestick. A rejection. This is a rejection. A rejection. So I know price will definitely go down. I might take my entry right after this candlestick. So this is going to be my entry, right? Right here. But if you really know one thing about sniper entries, on my key level, I'm going to take my entry. So this is So basically, how I trade is I don't wait for confirmation, right? I really don't wait for confirmation. If I have a very strong zone, then I know market is probably going to turn at that point. So right on this, I take my entry, and my stop loss is going to be on top, right? I take my entry like this, and then price is going down. Let's see what price does. It goes down, goes down, goes down, goes down, goes down, goes down, goes down. So I'll probably close here, right? Close at this point, because remember I told you anytime market turn, it's a what? It's a level. So at this level, I might think market will probably hit this and turn. As you guys can see, there was a rejection, right? This is what I'm going to be talking about with this bonus thing that I just said here, right? So this bonus is going to be a 10 to 30 pips, right? Pound trading strategy. So I'm going to be talking about that one. So as you guys can see, this moved what? 50 pips, right? It was a level. So any level get respected. But anyways, this went down, this went down, this went down. So your take profit will probably get hit. And then you close this trade. That's it. So I'm going to recap what I said about key level resistance and support. So always, all right, let me use a different time frame and see if I can find another one. All right. No, let me take this off and use your USD. Hold on. All right. So I'm trying to find a weekly key level and support, right? A weekly key level resistance and support. So basically, I want to look at a place that market respected a lot of times, right? And by using your eyes, you guys can clearly see that this side is a key level, right? Just by using your eyes. Market, really struggled to break this level on a weekly time frame and finally broke this, went down, retested this and went down. So if market was making its way up, then I'll be expecting market to drop off this, right? To drop off this. Let's see how many pips market dropped off this. This was 200, right? 250 pips. I told you every key level, it moves more than 120 pips. So this moved 200 pips, right? And always, one thing you guys should know is that if you have a key level, right, always look for a fresh zone. If I have a zone that hasn't been tested, right, I have a key level and then this is going up. My first time, right, I'm gonna see that rejection. But your second time might not be a rejection. Your second time, probably you're gonna see a rejection. You're gonna think market is gonna go down. You might get that rejection, right? You might get market hitting your level and moving probably 20 or 30 pips. But if that zone is fresh, right, it's gonna move more than 120 pips. So this was a fresh zone, right? It moved 120, but the second time wasn't a fresh zone. So as you guys can clearly see, market broke this. And if look, this is so actually next week, right? Next week, this week or next week, same thing. But I'm actually expecting to catch, 100 or probably 200 pips from this by trading with a trend, right? Market broke a key level. Look at this side. Market broke a key level, right? Retested this key level. How many pips do you guys think this dropped? 300 pips. All right. Market broke what? A key level. Retesting that same key level. I'm expecting market to do what? To go up. This is what a trend is. Breaks your level, right? Goes up, get that retest and do what? And that's what goes up. So this is my key level. Market went up, hit this key level. I'm expecting what? Market to go up. If I should take this to a lower time frame, right? I'm seeing this rejection. This might be, remember what I told you guys about double tops, right? Vice versa is going to be double bottom. So basically, I'm seeing market going up, hitting this, making a double bottom. So what I'm expecting market to do is I'm expecting market to open with an engulfing candlestick. I'm expecting to see an engulfing candlestick, right off this key level. And right after I see that engulfing candlestick, I'm going to take my entry. I can switch this to a lower time frame and see exactly what market is doing. So this is coming down, right? Coming down. I'm not expecting this to break this. If this should break this level, right, this last level that I have here, then I know for sure market is going to what? It's going to drop. But if this should hit this, right, and does something like this, then what I'm seeing is market is changing in direction, right? Because what market was basically doing was market was creating this lows, right? Lows. At this final low, right? What I'm seeing is new highs. Market is not able to break this. Market is creating new highs. So obviously I'm seeing a change in what? Change in direction, right? So I'll be expecting market to do what? To go up. Same thing with USD. Same thing with this, right? Let's talk about this. Market was creating what? Lows. This is how you know market is trending downwards, right? Lows. This was my last low. I was expecting market to break this and create new lows, but market came up. Market wasn't able to break. Now market is creating what? A new trend to the upside. Look, as you guys can clearly see, market is not able to break this. Market wasn't able to break this. Market wasn't able to break this. So what is this telling you? A change in what? In direction. A change in price. Market is what? Changing in price. Is this recording? Oh yeah. All right. So market is changing in direction, right? Market is changing in direction. So this is a change in direction. This is showing you an uptrend. All right, let's talk about our next let's talk about our next market structure. So the next market structure is going to be something called a head and shoulder pattern, right? It's right here. You have your left shoulder, right? And then you have your head. And then you have your right shoulder right here. And then, yeah, just like this. Right? So this is what you have. This is a market structure. And remember I told you guys, right? This market structure, double tops, double bottom, is the same thing as support and resistance, right? This is what the market is being built off. Market does the same thing every single time, right? So if you have head and shoulder pattern, if you have breakout, if you have like everything is basically a structure. I have a support, I have a resistance that got broken. Market is getting back to that trend line, right? So I'm going to show you an example. Market went up, right? This is a level, it's a structure. Market broke this. What am I seeing? A trend. Up, retrace, breaks, retest. This is a trend. This is your support level. Market is going up. If market hit this and goes back down, what do I have? I have a resistance. And this resistance is creating what? Equal lows. It's just names that we give to these structures, right? It's just names. But if you actually think about it, it's basically support and resistance, trend line, support and resistance. Basically, that's it. So let's talk about head and shoulder pattern. It's so one thing about head and shoulder pattern is basically a reversal pattern, right? If market is changing in direction, it's the same thing with double tops, double bottoms. If market is changing in direction, if market is going up and market wants to come down, it creates this, these patterns. So this is going to be a reversal pattern. Let's see how it works. So I have a trend going up, right? I have a trend going up. It breaks this, right? And then, hold on. So I had a level here. And what I was expecting market to do was I was basically expecting market to hit my level, right? And do what? Go up based on trend. But market wasn't able to break this level. Market actually got into this level. And this is going to be a level. I told you every turning point is a level, right? Market goes up, hit this as a retest, right? A trend, a downtrend, breaks this level. I'm expecting a retest and goes back down, breaks this level and goes back down. What is this? It's the same thing, right? Same thing. Double goes down, up, down. See, same thing. It's just about level structures, right? So this is a reversal pattern, right? So anytime market goes up like this, comes down, goes back up, comes down, goes back up, and comes down. This is showing you an indication of a what? Of a reversal. So you're gonna have this line as your what? Support. If price should get to this line, then I'm expecting price to do what? To drop down, right? Vice versa. If price goes down like this, goes up, breaks this level, goes back into this level, comes back down, and goes down like this, right? This is my level. I'm expecting market to do what? Retest this, and I'm expecting what? A drop. If you actually forget about this side, let's just pretend this side is not happening. What are you seeing? I'm seeing a trend, right? Trend. So look, market is based on trend, support, and resistance. These two things, that's it. Trend, support, and resistance. Trend, support, and resistance. It's just the structure, right? How it's looking like. So if I should turn this back on, right? What I'm seeing is I'm seeing market going down, going back up, going down, broke this level, came back down, and went up. What do you guys see? Same thing, right? Same thing. So I'm expecting market to do a drop to this level. And then what do? Obviously, I take a buy trade. So this is what I'm actually thinking of USD CAD. I'm expecting a drop of this level, right? and I'll be expecting market to go back up based on market structure, right? All right. So the next thing is going to be something called, hold on, let me see, continuation. A breakout strategy, right? All right, these ones. No, actually, I posted one, so we're going to be using this one. This is what we're going to be using, right? We have a falling wedge, bearish wedge, a whole lot. I'm going to be showing you examples. I'm going to be drawing them, and then I'm going to explain to you what it means, right? I'm going to end this, and I'm going to send